Hi everyone. I hope everyone is holding up well enough, especially for your options for the last 2 to 3 weeks, because the Nasdaq index, the SPY and the Dows were going down significantly. And if you're able to stomach your losses, well, depending on how much trade you have put into the market, then you will be very happy for the last since beginning of the week, or basically for the last 5 to 6 days, because all the indexes has again rise to their near to their new highs. So in fact, the S&P 500 was at its all-time high yesterday. There's a little bit of pullback for all the indices today, except for the Dow, I think. And Bitcoin has actually reached around 66,000. So that's good news. And today, what I'm going to share with you will be the one sector that will excel, all right, in the upcoming inflation, when the inflation rises and interest rate goes up. All right, so what happens then? What are the sectors that we need to watch and take opportunity of? So let me drill down and go through what are the one sector that will benefit us as investors. So as you can see, I indicate here banks ETF. So two ETF that I would like to share will be the KBE, right? So KBE is an ETF, and when we look at the PB ratio and the PE ratio, okay, let's start with KBE first. KBE represents the large banks and institutions that this basket of ETFs holds. So on the right hand side, I have actually prepared a sort of a box. As you can see, we actually compare the S&P 500 index PB ratio with KBE PB ratio. So as you can see, S&P index is 4.85 and KBE, as this is of today, is 1.32. So this represents a discount of 72.8%, right, of KBE right now. Now, when interest rates goes up, okay, banks are the ones that benefits because they actually borrow money, right? They lend money, they lend money to all the small institution SMEs, right? They lend money to the SME and that's where they make money. So today we see that the bank's ETF like KBE is on an uptrend, and the PB ratio, as I've shown you, is great. And also, if you look at the PE ratio, okay, versus the S&P 500 again, you can see that the PE ratio is only 12.16 versus 28.66 of the S&P 500. So basically, it's actually less than half. All right. So another way to look at it, because PE ratio is price over earning ratios, right? PE is price over earnings ratio. So what you can think about here is that the price would then need to go up 2 times more, right? KBE will need to go up 2 times more in order to reach about 28.66 of the S&P 500 indexes. So at present, this is at a great discount of around 73%. Now let's look at KRE. KRE is for regional banks. This ETF is for regional banks. And again, we look at the PB ratio, price to book ratio, and the PE ratio of KRE. So I can see here, 4.85 again, S&P 500 index versus KRE, 1.36, represent about 72% discount. So in my view, in my opinion, do your own due diligence. You can consider banks ETF, right, before the inflation kicks in and interest rates start rising. Right, now let's take a look at KRE charts, right, the charting. As you can see here, this is a recording of yesterday's. I actually copied the chart from TradingView. As you can see, it is all in an uptrend. The 20, 50, 100, and 200 is all pointing to an uptrend. MACD is looking good, right? So you may like to wait for it to dip a bit before you enter. But if you enter ETF, right, you can just enter in tranches, or depending on how much you want to buy. So you can enter in tranches, or you wait for the the ETF to pull back a little bit before you enter. So this is KRE, and let's see KBE. All right, so this is KBE, right? Look the most similar with the KRE, right? The indices are pointing up, all are good, and MACD is also on a green, symbolizing it is still bullish, right, on this ETF. So let's now go into what are the bank stocks. If you are more aggressive, you want to go into individual bank stocks that you want to invest in, right? So what I will share will be the three banks here: JPM, BAC, and WFC, Wells Fargo's. So do your own homework, check the fundamentals of this stock, and see which one you favors and you invest in it. Or you can actually have shares in three of the stocks if you would like. So let's look at the chart again. JP Morgan is on an uptrend, right? As you can see here in the blueprint here. Sorry, I just go here. Okay, so as you can see on the blueprint here, I've actually shown some indications where I have actually obtained from Morningstar, Jita, and Guru Focus. So this is done on October 18. All right. So as Morningstar says, the pack is around $180, right? So this estimate of $180 is calculated with the pack, right? Pack indicator. Jita gives you a score of 238 as a fair value, and Guru Focus give you a 304 as fair value with a margin of safety of 46.7%, right? So this is JP Morgan. Let's look at the next one, BAC. Okay, BAC again is on the uptrend. So like I say, all the banks are all on the uptrend now. So again, the indicators from all the various studies from Guru Focus, 44.13, margin of safety 2.5, right? Jita has posted $22, which is 102% over the Jita 9, and Microsoft, which I did a price to book ratio, which is $24. All right. So again, do your own due diligence and choose the right stock that you want to invest. Next will be Wells Fargo's, and again, it is the most similar, right, to the other two stocks. And this one here, as you can see from Morningstar, PB is 32.8, right? Guru gives you 51.5, right? And Jita give you $38, right? So you can check it yourself of other indicators and fundamentals and take the stocks that you like. All right, next. Now, when I talk about the market pulling back, all right, if you can hold and stomach the losses, I think as of 2 days ago, your losses will be reversed, all right? But if you are opportunistic enough to add on more call, then when the market picks up, right, in your direction, then you will gain more, right? So while holding on for your losses and wait for them to return, you can actually buy a call, be bullish about certain stocks, check the indicators, and then get into the stock and ride on their profit when the price is moving upwards. So one example here is that I actually had a buy call 3 days ago for BABA. All right, as you can see, BABA is actually on the uptrend for the last 1 week or so. So I did a long buy call of 602 days, and just within 3 days, I have gotten over $800 of profit. I'm still holding on to this because I think BABA is now timely, right, to add on stocks and to buy call and to ride on the profit. So for bank stocks, as I've just mentioned, BAC and Alphagos I've actually invested some time ago, and now the profit is running for BAC is $1,895. For Alphago is $1,200, around $1,200. For JPM, I think I've posted in the previous video, I have actually redeemed and profited $1,795 on options. I'm going to look at the stock again, monitor, and go in again when the time is right. All right. So, so this is the end of my sharing. So if you are interested to join Value Investing Option Strategy to Financial Freedom, please come in, and it will only cost you a fraction of your investment, which is only less than $30 for 1 month access. And what else, what's additional in it is it's very importantly, it comes with IWH mentorship and support group, whereby you'll be given a link to join this support group where you can ask questions which are in depth when you are doing your trading or you're doing your value investings. Okay, you can also join for a year for $197, which is a 45% discount, all right, as compared to the 1 month access. So again, you're welcome to join the free course. And if you're viewing this in YouTube, please subscribe to my YouTube channel, and please like and share this post to all your friends so that all your friends are aware of this. So as usual, this is Charlie Wong from Investing for Wealth and Happiness. Happy investing, and I shall see you soon. Bye-bye.